Let's discuss all the big numbers, right, that came through over the last many days. In case you missed out on them because of the festivities, we'll get you up to speed. Reliance Industries reported a mixed second quarter number. The consumer-facing businesses have put up a very strong showing, but the oil-to-chemical business continues to remain weak. We have a whole host of experts joining in. Prakash Diwan, Jalirani, who's the Senior Vice President, Institutional Equity Research at Nuvama Group, and Balaji Subramaniam, the Vice President at IIFL Securities, joins in. All three of them have tracked Reliance for years. Prakash, let me start with you. There was also the listing of the financial services business, which is, I think, a small part of the entire puzzle. But how do you think Reliance will react to all of this over the next few days? Weakness in oil to chemicals, but on the flip side, consumer-facing businesses have done really well.
Good morning, Sonia. So, I think there was no surprise in the O2C weakness that we saw. The windfall gains tax has, of course, impacted numbers in a significant way. And as long as it remains there, it's likely to kind of keep that lid on whatever the O2C can contribute. But what's heartening from these earnings is retail has come up with record metrics. After so many years of investing into the business, it's kind of finally coming of age. What happened to telecom, let's say about early last year, is happening to retail now, which means that the consumer-facing businesses not only combined contribute almost 50% of revenue, but could start leading to a lot of profitability increases as well. So the depth out there is there to see, and then we can see how that's kind of coming up. So for the stock, what happens is that you no more start evaluating it on what the O2C business gives, or just a sum of parts which has a significant weightage from O2C. But these businesses also will start getting some premium accorded to the overall calculations. My expectation is the stock usually gives in post numbers. It's historically seen that we've seen a bit of weakness after the numbers are out, but then it kind of recovers. But there is a lot of news trend that's coming up, and you'll probably see some upgrades closer to 3,200, 3,300 price objectives, which probably should be out. And that's what will probably keep the stock buoyant as FI flows start coming back.
Okay. Thanks for that, Prakash. It's Samvat 2079 as well. Prakash, there are so many banks to ask you, but let's start with Kotak versus ICICI. I mean, Kotak has obviously been the underperformer. Is there any reason now to, put some money there, or would you continue to back this horse, ICICI, which has delivered so much?
Good morning, Lata. Great to have you on the show. Yes, so essentially, ICICI continues to be the darling. It was a consensus pick for last Diwali, right? And it has probably delivered to a large extent. But what's interesting from the Kotak numbers this time around is, they've managed to get the NIMs up. Now, whether those NIMs sustain at 5.2 or whereabouts is a big question. And secondly, the fact that Kotak stepped off the accelerator, the pedal the last couple of years in terms of its lending profile. And they're probably making a comeback of sorts, and being a bit picky about what they lend to, whom they lend to, could probably be interesting because they will not compromise on margins while growing their book. If they continue with that strategy, of course, the CASA franchise has to kind of, get accelerated, commensurate and all that. So that's bound to happen. But Kotak always will start attracting premium valuations again, far richer than what it has been doing, let's say, over the last 12, 18 months, given the fact that all the subsidiaries are also locked into that valuation. So I think it does have a case for outperforming the market. And the market always likes something new, something which is yet to kind of, deliver. So Axis and ICICI have probably made it to the grade, but Kotak could see that underperformance get coming to an end. But it'll all depend on whether they can sustain this kind of a growth, these kind of metrics. So that's a key trigger. But I think the market is in a mood to give them that, be a bit charitable and give them that option.
Okay. I wanted to ask you about some of the smaller numbers that came through, Prakash. And out of that list, VIP industries look like a solid set this time. I mean, the sales are now 25% above the pre-COVID levels. And people are traveling, with a vengeance now. So your thoughts on the stock?
So, Sonia, it's not just traveling after a long gap, but, all your old luggage would probably have worn out as well, out of non-use maybe. And the interesting change that's happened in that sector, and that's one of the reasons why you've also seen the likes of Safari and all fly in the last 6 to 12 months, is that the Chinese imports have actually been curbed dramatically. So the entire market has shifted more towards these branded players, more of these Indian names, and that's exactly where they've got a bit of pricing power back, which they never had. They kept on bleeding, in fact, to a large extent pre-COVID, and it was very difficult to sustain any profitable growth. So that's kind of coming back. But you know what? It's like it's a turnaround. But let's say if this were to sustain, they've already start getting valued very richly. So, but look at Safari, maybe on a like-to-like basis, you'll probably find slightly better strength out there as compared to VI.
Okay, all right.